Okay, hello and welcome to Capsim Global DNA round 5. We are currently in round 5 and looking at key performance indicators down here, you realize that we have several companies, that's Andrews, Baldwin, Chester, Digby, Erie and Ferris. In this case, we are company Baldwin, and in the previous round we had a stock price of 38.19, sales of 185, cumulative profits of 27,000 and a contribution margin of 35% with emergency loan of 0. Remember in round 4 we had an emergency loan of around 73 million. So when I was given this simulation, I changed it around and right now we have no any emergency loan. So in this case, we were position 3 after clearing with the emergency loan. So after the company Andrews and company Aries, we were position 3 as Baldwin. So first thing first, we are going to start with research and development, which is our first page. So clicking on research and development, we have several key areas that we need to look at. After research and development, you are going to marketing, production, and then finance. So before we make any decisions in R&D, we need a report called the Globe. So the Globe is going to act as our reference point as we make decisions for round 5. So these are the statistics of the previous round, the analysis. For company Baldwin, as we had already said, these are our specifications. So we'll go back to our R&D page, and in R&D page we are going to make decisions for product Baker, beer and Borek. So in this case, we are going in research and development, we are making decisions for speed, accuracy, service life and age. So in this case, for our product Baker, currently we have a speed of 7.1, an accuracy of 7.1, service life of 18,000 and an age of 3.9. And we are currently having region kits in America and Europe. So before we update, these are our updates. We updated our speed to 7.3 and accuracy of 7 to 7.3. So to make those decisions, we had to look at the Americas. So looking at the Americas, we have our budget. We have our budget statistics here. So for example, before we make decisions for positioning in R&D, here customers wanted a speed of 7.3 and an accuracy of 7.3, and it has an importance of 17% to our customers. The other thing that's here, it's the service life. They need service life of between 14,000 to 20,000 hours, and it has 9% importance. So given we had a speed of 7.3 and an accuracy of an accuracy of 7.3, we settled for the same. We had to update our speed to 7.3, accuracy 7.3, and our service life we maintain it at 18,000 because we are given a range of 14,000 to 20,000. So 18,000 is cool. So from there, after updating, you realize that our product will be out in the market by date 13 at April 2030. And cost of development is $284. So we'll go to our next product, which is beer. Beer, it's a high-tech product, so it's not in the budget and it's in the performance segment. And looking at the performance segment market buying criteria, you realize that speed has the most importance with an accuracy and a speed of 10.9, with the most importance of 39%, followed by age of 0 years because it's a high-end product. They need a product that's new. A service life of 17,000 to 23,000 hours with 19% importance. So with that being said, we had to update our beer product specifications, and we updated it from 10 to 10.7, accuracy of 10.0 to 10.7, which is close to 10.9. And this because we had to save on cash, because again putting it at 10.9 is quite expensive, but this within the range, given that we have a market, we can extend it between a range of plus 0.7 for our speed and accuracy. So we increase it with plus 7 to 10.7. We maintained the service life at 20,000 because this product will with that, this product will be able to cross over to sell between the low end and the high end market segments. For the region kits, we had America and we had Europe. Our product will be out by 12th of August 2030. So we have at least 4 months of selling our product. Our cost of development was $621. So from there, we are going to product Borek, which is our third product. Looking at this product, we had given it specifications of speed of 10.9, accuracy of 10.9, and service life of 21,000. And region kits we are selling in all the markets: America, Europe, and Asia Pacific. The only problem right now is our product is currently in development. It's not yet mature, but it will be out in the next round. So with that, we are done with the R&D decision making, and we'll move to the next segment, which is marketing. Going to marketing, you realize that in marketing we have 3 regions: Americas, the Europe, and we have Asia Pacific. So while making decisions for our products, Baker, Beer, and Borek, we are going to make the decisions in Americas, the Europe, and the Asia Pacific markets. So here we are going to start with Americas. So looking at the Americas, we have products Baker, Beer, and Borek. So we'll start with Baker. Looking at Baker, in our previous round, which is year 2029, we were pricing our product at 31.75. And just one thing, to make one thing clear, in marketing, we are going to make decisions for pricing, the price. And while making decisions for price, take note of the local price. The price will be indicated in the local price. So that, for example, in this case, it will be, we'll look at this, we'll measure on this price, which is the local price in the market and in the region. After price, we are looking at awareness and accessibility. So we are going to make decisions for promotion budget and sales budget. Also, we are going to make decisions for our worst case and the best case, which is under forecasting. Again, we can make decisions for regional expenditures, which is regional promotion and regional sales budget. And another thing to note is the currency exchange rates. So for instance, in this case, we are looking at the exchange rates. $1 equals to $1, which is America. So we are using one currency to do the selling. Looking at the tariff, we have 0% tariff and 0 shipping costs. So we'll make the decision. So if we had a price of 31.75 in our previous year, in this year, we need to know what our customers want. So looking at our budget, market segment, because our product Baker is there, you realize that price has the most importance, with 55% of our customers being considerate of it. And the price has to range between $12.5 and $32.5. So in this case, we are going to put something that's close to 32.5, and it should be slightly below it to favor our customers. So in that case, we are going to give it a pricing of $30.75. From there, we'll give it a promotion budget of $1,500 and a sales budget of $1,500. In this round, we are not going to make any expenditures in the regional and regional sales and promotion budgeting. Then the next thing will be forecasting, and forecasting happens to be one of the most important factors to consider while making decisions in Capsim, and it's one of the most crucial because it affects what we are going to sell. It also affects our sales, it affects our profits, and wrong forecasting can lead to huge inventories which are quite expensive, and can also lead to emergency loans which are quite expensive in interests, therefore leading to losses. So from there, I think we are done with product Baker. So we'll go to beer. Looking at beer, we look at price. In a previous year, we sold at 42.50. So this year, it's in the performance market segment. So we'll toggle over to the performance. So looking at the performance, price has the least importance with 10% of customers. And looking at it, it's between 22.50 and 42.50. So in our case, we settled for a price of 41.75, which is here. And looking at the local price, it's also 41.75. We gave it a promotional budget of 1,000 and a sales budget of 1,000. We also did a forecasting, and we gave it a worst case of 11.50, and we gave it a best case of 11.50. We had already calculated, because if we were supposed to calculate the forecasting, it could take a lot of time, and therefore the video could be quite long. But we'll make another video showing how we do the forecasting. Or also, if you need help with your Capsim Global DNA, you can contact us on our email that I'll give below, or you can comment and we'll know way forward. So from here, we also gave it a sales budget of 1,000. So with that said, we'll go to the next product, which is Borek, to our final product. This a new product, so we gave it a pricing of 41.75 because it's in the performance market segment. So we gave it 41.75, just like beer. We invested $1,000 in promotion and sales budget. We gave it a forecasting with the worst case of 400 and best case of 550. We didn't make any decisions for regional and sales and promo budget. So with that said, then being done, we'll go to our next region, which is the Europe. Looking at Europe, I need us to make a keen observation on 3 key factors. Here we have exchange rates. So $1 equals to 1.10 euros. So we'll have to consider it while making the currency. It has a tariff of 4.5%. So in Europe, we have a tariff of 4.5%, and a shipping cost is $3 per unit. So with that, we'll go to our first product, which is Baker. In Baker, in a previous round, we sold at $32.25, which was 32.25 euros. So in this case, we had to give it a pricing of 29.25. Of course, we will first of all start by looking at the budget market segment for product Baker. Price has the most importance, between 12.50 and 32.50 euros. So we settled for 32.18 euros. This is our local price, local currency, so we'll take note of it. So we have 32.18 euros. That's our pricing. And then we gave it a promotion of 1,000, and we increased our sales budget from 1,000 to 1,500. And then our worst case is 1,400 and our best case is 1,450. And the fact that it's in blue, it means that we are making profits. If it were in red, it could indicate that we are making losses. Our next product is beer. Looking at beer, we sold in our previous round at 42.50, and currently we look at the customer buying criteria. It's in our performance. In performance, they need a product that's between 22.50 to 42.50 euros. So because they need it at 42.50 and they don't really care about price, so we are going to give it the highest price. We'll give it 42.35, which it's equivalent to $38.5. I said we need to take note of the currency so that we don't mess any. We gave it a promotion of 1,000 and sales budget of 1,000. Worst forecast of 1,200 and best case of 1,350. And maybe to just give you a hint on how to do the forecasting, we have the forecasting tools right below this page on our left hand right, and we'll take note of the growth rates, market size, and the unit sold. So for example, in this case, to calculate next year's demand, we take 18%, we multiply by the market size, which is 3,866. The amount we get, we add it to the market size, current market size, and we use it for forecasting to forecast the next forecast for the product. So in this case, best case, we have 1,350. We'll go to the next product, which is Borek. In Borek, it's a new product in the Europe. It's the first time we are selling it, so we allocated it because it's in the performance market segment, and here customers don't really care about pricing, and we realize that it's between 22.50 and 42.50 euros. So here we settled for 42.35 euros. A promotion budget and a sales budget of 1,000 for both. Worst case of 350, and we gave it a best case of 400. And we are having $2,068 here, which means we are operating in profits. With that being said, we'll go to our final region, which is Asia Pacific. In Asia Pacific, you're also going to start with considering the exchange rate. Looking at the exchange rate, here $1 equals to 1 Singapore dollar. So with currency, we will not have any problem here. They have a tariff of 0 and shipping cost of $2.50. So we'll start with the product Baker. Looking at product Baker, we sold it previously at 32.49 Singapore dollars, and in this round we decided to settle for 31.75 Singapore dollars. That's based on our customers' wants here. It's between 12.50 and 32.50, so we settled for 31.75. We gave it a promotion of 1,000 and a sales budget of 1,000. Promotion budget ensures that our products are well marketed and our customers, they are promoted, therefore they are our customers are aware of them. So, and the sales budget, which is here, sales budget helps in accessibility. This ensures that our products are easily accessible, just so you know. So we'll start with product Baker, and we had already said that we allocated it a pricing of 31.75, a worst case of 820 and a best case of 900. That's for the forecasting, which we use this information here, this data here, the growth rate, market size, to obtain the demand for the next round, and then we calculate the forecasting. So we'll go to the next product, which is beer. Beer in the Asia Pacific market, it's in the performance market segment, which is here. So in performance market segment, the pricing has the least importance, between 22.50 and 42.50 Singapore dollars. So we settled for 41.75 Singapore dollars as the pricing. As compared to the previous round, we had 42.55. We had to lower at least, so that in every round, our customers, in every year, we lower our price and customers are happy with those decisions, therefore boosting our sales. We gave it a promotion of 100%, which gives it a total awareness of 44%. Sales budget we increased to 1,500 from 1,000. We increased the accessibility of our products to 61%. In this round, I also want you to note on one thing. We invested 1,000 for the regional promotion, and we also invested 1,000 for the regional sales budget, which gives a total of $2,000 for regional marketing. This will help us boost in our regional sales. So with that, we also gave it a worst case of 730 and a best case of 810. This information is also here, the growth rate, market size, and the units sold. So with that, we'll go to the next product, which is Borek. Product Borek was new, and it was in the performance market segment, so we gave it a price of 41.75 Singapore dollars, and we gave it a worst case of 300, and we gave it a best case of 350 for our forecasting. For our promotion, we allocated $1,000 for promotion for our awareness, and for sales, we gave it we invested 1,000, and it gave us a total accessibility of 61%. With that, we are done with our decision for marketing page. And in marketing page, we are doing 3 areas: the Americas region, Europe region, and Asia Pacific. So with that, we'll just recalculate and we move to the next decision making page, which is production. In production, we are also going to make decisions for 3 regions: the Americas, the Europe, and the Asia Pacific. So we'll start with the Americas. So with the Americas, I want us to do the first decision we are going to make here. The first thing we are going to do is we are going to have to invest in our capacity down here, and we're also going to invest in automation. And looking at this page here, you realize that we have a total maximum investment that we can, that's the maximum amount of money we can spend this year in capacity and automation. So we have $22,000, 416,000. So we had to spend we spent 18,760 in automation, in capacity. We increased our capacity from 3,500 to 4,200. This because we are having a growing demand in the market, and we are likely going to sell more in the coming round, so we had to increase on our capacity. We also increased our automation from 5 to 5.2. In automation, in investing in automation reduces on the labor costs, and therefore reducing on the manufacturing and production costs, therefore giving profits. So we invested 3,360 in automation, and we spent a maximum of 22,120. Therefore we utilized the amount we were given. So our first product, we are going to look at baker in the Americas. So we had a forecasting demand of 1,600 and we had an inventory of 176. Inventory means the number of products we did not sell last year. So we are going to factor it in. We are going to subtract this 176 from 1,600. So the remaining amount, we had to outsource 1,325 units because we had a huge amount of remaining outsource, and we only invested 100 in production. So in that case, what we mean is we are going to produce only 1,000 units this round, but we are going to outsource. We are going to import 1,325 units from abroad. So with that said, you realize that we have a contribution margin of 31.6, and this indicates that we are above 30%, which is the minimum we should, the average we should have as the contribution margin. We go to the next product, which is beer. We had a forecasting demand of 1,350 and we had inventory of 1,189 units. So with that, we factored in the inventory and we are only remaining with 161 units. So we opted for outsourcing the 161 units. And here we had, you realize that the cost for outsourcing is 24.29 per unit, and we have a contribution margin of 41.8%, meaning we are making profits. We go to our third product, which is Borek. In Borek, we had a forecasted demand of 550. We produced 303 and we outsourced 250. And as we make these decisions for production and outsourcing, it affects our capacity. It is subtracted from the capacity we invested here. So you realize that there is here remaining capacity, it's highlighted here, and there is remaining outsourced. So as we make decisions here, it is subtracted from the total amount we have here. So for example, in this case, as we have already made the decisions, we have maximized the remaining capacity and we have used all of it. For the remaining outsource, we have 1,314 units out of 4,200. So with that, we finished product Borek. So we'll go to the next region, which is Europe. In Europe, okay, we are not going to make decisions for capacity on the automation because when we made it for production, it's cutting across all the three regions: the Americas, Europe, and Asia Pacific. That applies to automation also. So here, product baker is the first one. We had a demand of 1,450, so we produced 1,464. We factored in the shortfall, and cost per unit is 20.98, and the contribution margin is 28.3. That's the best we could achieve here, but we'll balance it with the other product so that we can get an average of 30. The next product is beer. We had a forecast demand of 1,350 and we have zero inventory, meaning we sold all our products in this product last round. So we produced 897 and we outsourced 462. And looking at our contribution margin, we are at 31.3, so we are above the average and we are good to go. We go to our final product, which is Borek in the Europe. We forecasted 400, which is here. We had zero inventory, it was a new product, so we produced 323 and we outsourced 80 units. We have a contribution margin of 30.2, so our new product is actually making profits. Go to our final product, we'll go to our final region, which is Asia Pacific. In Asia Pacific, we have a forecast demand of 350. We have zero inventories. We'll start with Baker, I'm sorry. So with Baker, we are having a forecasting demand of 900. We have an inventory of 295. So we had to factor in this 295. After subtracting it, we produced 99 units and we outsourced 507. We wanted to maximize on outsource because we had limited remaining capacity. Looking at the contribution margin, we have 33.3%, meaning we are making profits. Next product is beer. Beer we forecasted to sell 810. We had an inventory of 54, so factoring it in, we remained with a production of 763 units. Looking at the contribution margin again, we have 45.4%, meaning we are operating on profits. We got our final product, which is Borek. It's our new product, forecasted 350 units. We produced 251 and we outsourced 101 for the sake of balancing the remaining outsource and the capacity at hand. Looking at the contribution margin, we have 36.0, meaning we are operating in profits. With that said and done, we are going to our final decision making page, which is the finance. And just in case you need any help with Capsim, you can comment on a video and I'll get back to you, or I'll give an email where you can contact us for more guidance and more help. And for more videos, we'll be uploading them. You can simply subscribe and like our videos. Yeah, so we are on our final page, which is finance. And looking at finance, we had already taken a loan. We had already taken some debts, but even before that, I just want to show you that we are already operating in profits. Let's cancel the loans we had taken. Let's recalculate. I just wanted to show you that we were already operating in profits even before we took these loans. So looking at our projected closing cash position, this is the the starting cash position for 2030 was $12,966, and the closing cash position as we end the round, we have been able to raise $20,037, which is actually $20,037 in profits. So with this, we just thought we should borrow some other cash so that in case we have other things we should fund, we will be good to go. So we decided to spend here 8,330 for our issue stock. So if you want to raise money, we issue stock. With the issue stock, we issue long-term debt, which is here, long-term debt, or we issue the current debt. The good thing with the long-term debt, I normally advise people to go for long-term debt because it has a cheaper interest, therefore you don't have to pay a lot of money back. So in this case here, we took 2,000. We took 2,000 in the long-term debt, and we took 8,000 for the current debt. Current debt is quite expensive in a way, but it can help raise some money for running our activities as a company. So with that being done, we realize that we have a projected closing cash position amounting to 37,199,000. That's good to keep us going in our next round. With that being said and done, I think we are done with the Capsim Global DNA round 5 decisions, and we are probably going to improve on our stock price. So going to improve on our projected 2030 earnings per share, shares outstanding, and therefore we're going to make profits in this round. If you need any help with Capsim, kindly like, subscribe, and comment on our video, and I'll get back to you. Thank you.